Today, the DFA Financial Pressure Reports for May 2024, Episode 6, Postcodes You Asked For. Hello again, it's Martin North from Digital Finance Analytics, well known as Post, covering finance and property news. Well, here we are at the end of our sequence of shows relating to our May 2024 stress analysis. And what I'm going to do today is to walk through the postcodes that you, the audience, asked for in the previous shows. So thank you very much for all of the comments, and hopefully I'll be able to cover all of the areas you asked for in this show. I should warn you, it was a little bit of a long one, simply because we had lots of requests, but that's not a problem. Just to recap, what we did over the last few days was firstly to overview the May results, and then we did specific shows on mortgage stress, rental stress, investor stress, the overall financial stress, that's the household view, and now we've got this postcode analysis, which is the viewer requests. And this is this show. And just as we go into this, for those who may not have caught up, we run our analysis every month from our surveys, and then we put it into our core market model. And this is a very sophisticated analysis with 52,000 households, or 0.5% of those across the country, which means that it is quite granular and quite detailed. And that means you can slice and dice the data lots of different ways. And also, we can form views about where things may go using our scenarios. And our scenarios, just to recap, are based on three different futures. The first, the Goldilocks zone, where we see that rates don't go up any higher, but they fall later. Inflation is beat. We don't get a recession. The second is the soft landing, the base case, where we again see rates staying at 4.35% through 24, but inflation falls, but actually does tick up again and stays above target until 2025. We don't get a recession in Australia, but this time migration is reduced. And the third scenario is the nightmare scenario, rates above 4.35% with the giving mortgage rates of 7.25% or thereabouts, and it stays high through 24 along with inflation, unemployment rises, wage growth stalls due to recession locally. Rates ultimately get cut and migration drops, but meantime the damage is done. So that is the way that it all plays out. What it basically means is we take the stress, the price trajectory, the buying and selling intentions from the surveys, the migration data that we've got, the broader economic data, put it into the core market model through our scenarios, and then we can actually form a view as to where prices may be moving. These are not projections. They're scenarios, sensitivities if you like, but it does show you that not all parts of the country are behaving in the same way. And just before I get into the meat of the show, just to remind you again that if you would like a detailed conversation about one particular suburb, we can do that via our DFA one-to-one service. But I need to remind you that this is not specific financial advice, but I can dive into my data and look at, within the postcode, the underlying trends, things like stress, home price trend data, and perhaps a view of where prices may travel through the modelling. It's about an hour conversation via Zoom or by phone, and there is a cost involved because of the amount of work that's done to be able to make this work. And we're booking 5 weeks or so out at the moment, 3 to 5 weeks. And if you're interested in this, go to my blog, send me a message, and we'll try and sort something out. And just to underscore again what I said in my earlier shows, when we talk about stress, here we are talking about cash flow, money in, money out, whether you're looking at mortgages or rents or investors or aggregated to the total financial footprint of households. This definition of stress is different to many others that are out there, but it's probably the most accurate. So let's dive in and start looking at the postcodes. The first one comes from Jesse Koch, 3480. Instantly, comment here is good. This format is far better and clearly less stressful than live. Yes, I agree it is. And you asked for 3690, so here you are. And for those who may be not familiar with our model, this is the one-page summary that we get. Firstly, we get the details of the household count in this particular postcode based off the census. And you can see there that there are more people renting and borrowing than own property outright. We also have the property mix data. 87% have houses. Other types could include units, or other could be over retail accommodation, for example. Then we've also got a people ratio here. This is the ratio of each per property. And if it's higher, then it's going to be families. If it's below 1, then they're individuals. We've also got the vacancy rate data. This is when the census was run back in 2021, so just around the COVID time, of course. So that did distort a lot of the vacancy data. We've also got the gross investment yield data. This is actually the current data from our modeling. Gross investment yield is the comparison of the price of a typical property versus the full rental flows, if you can rent it. Net investment yield is comparing the money in with all the costs going out. And here you can see that net investment yield is negative. We've also got the taxable income data from the ATO and the household census data. And that leads us then directly to the disposable monthly income calculation. And we can also compare the percentage. And that percentage is comparing the income versus the outgoings. So the typical mortgage payment is 1,662, which is about 34% of the average disposable monthly income. The average rent's around 29% at 1,420. And finally, we have, based on our scenarios that I discussed earlier, what may happen to home and unit prices, houses and units, with the best case scenario showing a small fall over 3 years and deeper falls if in fact our base or worst case scenarios play out. Now we'll look at the next one, and this is from Why Can the Bodies Fly? I like the new format, Martin. Would you be able to add postcode 6163 to the list, please? Sure can. So 6163, which is in the area of Samson, district of Brand, in Western Australia. Disposable monthly income is just over $5,000 there. You can see there, but you can see these percentages are quite high, so it's worth delving into that. And the first observation is that of the 23,000 households roughly there, 39% are borrowing, so huge mortgage belt, a lot of renting as well, of course. About a third are in mortgage stress and half are in rental stress. Bit of stress to investors, but not dramatically so. And the overall household in financial stress, around 30%. So it's there, but it's not as high as in some other areas. 3/4 of the properties are houses, but there are also units and other types there. People ratio is indicating some families, not just individuals. The vacancy rate is very high at around 8%. Gross investment yield is 4.5%, and the net investment yield is positive 1.9%. Average taxable is around 80 to 85,000, depending on whether you look at the ATO or the census, which gives us that 5,400. And it's also worth noting that 40%, 40.3% is going on the typical mortgage is $2,178 a month, or the average rent, $1,745 a month. And it's interesting to note that the taxable income for the individual and for the household is roughly similar. In some others, we see the household census data much higher because that's measuring more than one income. But here, we don't see a lot of multiple incomes necessarily servicing this particular postcode. In terms of price scenarios, it's pretty positive. Best case scenario over 3 years, maybe another 22% rise for houses, 20% for units. The base case, a small rise. The worst case would be a fall over 3 years. Now we're going to 4217 from Lady Jojo. And 4217 is in the Brisbane and Moreton area and includes Surfers Paradise, Main Beach and other areas there too. 19,000 households. of which 31% are outright, 25% are borrowing, but 43%, a massive 43% are renting. The stress is relatively high, particularly in the rental stress area, with 81% showing up. Some mortgage stress, 1,900 roughly households in difficulty. Stressed investors, so because of course the rental stress is a problem, therefore investor stress is also a bit of a problem too. And that takes us to a household in financial stress number of 59%, which is relatively high. Looking at the property mix, 24% of houses, 61% of units, and there's also other types of property there too. It's worth noting the people ratio is quite a lot lower. So this is at 1.55, going to show you quite a few individuals as well as some smaller families possibly. The vacancy rate's massively high. Of course, a lot of Airbnb and a lot of holiday accommodation and second homes, so that's not surprising. Gross investment yields 4.7%. Net investment yield is just positive at 0.8%. And looking at the taxable income, the ATO said 85,000, the census said 76,000, which gives us a disposable monthly income around 4,700, with 49% going on the typical mortgage of 2,340, and the rent around 45%, 2,178. And looking at the scenarios, the best case is a rise for both houses and units over the next 3 years by around 9% or thereabouts. But the base case or the worst case scenario would be a fall in value. Next one is from My Supply Chain 5918. And you asked for postcode 3931. Well, 3931 is in Mornington on the Mornington Peninsula. And here we have 11,000 households, of which 42% own outright, 34% are borrowing, and 22% are renting. In terms of mortgage stress, 35% are in mortgage stress at 1,374, but 86% are in rental stress, a very big number. Some stressed investor stuff going on too there, and household in financial stress around 41%. 77% are houses, 10% are units, 12% other types of property. People ratios above 2, so that's going to be families rather than just individuals. The vacancy rate, high again, of course, because this is an area of second homes and holiday accommodation. And around 9.4, just over 1,000 vacant. Gross investment yields, positive at 3.5, but net investment yield is negative, underwater, losing money, minus 0.4%. The taxable was reported at 81,000 and the household census at 75,000. That gives us a disposable monthly income around 4,716, with 50.9% going on the typical mortgage at $2,400. That's one of the highest we've seen. And for the rents, 42.3% or 1,993. And looking at the scenarios, even the best case scenario shows a bit of a loss over the next 3 years. And the base and worst case, a more significant loss. Now we're going to postcode 3216. Mrs. 164 asked for this one. Thank you for the request. So this is Huyton in the Geelong area. And here we have 23,000 households in the postcode, with 35% owning outright, 37% borrowing, 27% of renting. Mortgage stress is high at 55.1% or more than 4,954. Rental stress is at 88%, even higher, over 5,700. And we have a bit of stressed investor stuff going on. The aggregate financial stress metric here is at 50.5% at more than 12,000. So that's very high. Looking at the mix of properties, 84% are houses, small number of units, other types of property there. The people ratio is relatively high at 2.32, so that's going to be families. The vacancy rate at 5.8% was on the higher side, could be some second homes and what have you there. And looking at the gross investment yield at 3.3, compared with net investment yield underwater at minus 0.4%. The individual ATO said 77, the household census said 89, so we're seeing multiple contributions to some mortgages there. And that gives us a disposable monthly of around $5,556 each month, with 37.4% or just over $2,000 in a typical mortgage and 32% going on the typical rent at $1,794. And looking at the scenarios, well, even in the best case scenarios, there is a bit of a fall over the next 3 years and a more significant fall in our base and worst case scenarios. All right, so the next one to look at is Launceston, and that's postcode 7250. Now, we'll just add that we've got 100% here. This is plus or minus 2%, so it's high. It may not be everybody. Nevertheless, in this postcode, which is in the area around Launceston, 21,800 households, 35% own outright, 34% are borrowing, 30% are renting. A lot of mortgage stress, a lot of rental stress, fair degree of investor stress, and overall household financial stress is very high. 81% are houses. There are some units and other types of property there too. The people ratio is 2.14 and the vacancy rate is 7.2%. The gross investment yield is 4.6. The net investment yield is minus 0.8. And looking at the average taxable from the ATO, $74,000 a year. The census said 72,800, so that's pretty close. That gives us a disposable monthly of around 5,500, with 28% going on the typical mortgage, 1,560, and 25.6%, 1,420, going on the typical rent. Looking at the scenarios, well, even in the best case scenario, we're looking at falls around 13% over 3 years in our best case scenario, and the worst case scenario, a further fall. Now we're going to look at the next one, which actually is 4 postcodes, and we're going to start with 4184. So 4184 is the Russell Island area in Brisbane and Moreton, and there's about 4,300 households there. More than half own outright, 24% are borrowing and 23% are renting. 25% are in mortgage stress. A lot of rental stress, though, some stressed investors, and overall household financial stress at 41.5%. Most of the properties are houses. People ratio is somewhat lower, so that could be some individuals living in the properties there. The vacancy rate is very high at 20%, so that suggests also Airbnb and also holiday accommodation and second homes. Gross investment yield is 4.7, net investment yield is positive 0.7. Looking at the income from the ATO, 60,000. The household census said 39,000. And looking at the disposable monthly, based on those figures, we have 42.7% going on the typical mortgage at just over $1,000 and 51% going on the typical rent, $1,296. On the scenarios, the best case scenario would be a rise of around 10% for houses, 8.7% for units over 3 years. The base case and the worst case would be lower. Looking at the next one, 4212, which is Helensvale in Brisbane and Moreton. They're 12,600 with 35% owning outright, 41% are borrowing, 23% are renting. Mortgage stress is at 27%, rental stress is at 92%, stressed investors at 32%, and overall financial stress at 40%. 71% of houses, some units and other types of property there. People ratios 2.41, so it's a bit higher. Vacancy rates 8.1%, so that could also be some Airbnb and temporary accommodation. 4.7% gross investment yield, 0.4% net investment yield. The taxable income was 89,000, but the household census at 102. So quite likely multiple incomes are going on the average mortgage there. Disposable monthly income on average around 6,200, with 41% going on the typical mortgage at 2,600 and 41.6%, 2,616 going on the typical rent. From a scenario perspective, the best case would be around 10% higher over 3 years for houses and units, but the base case and worst case would be a fall. The next one is postcode 2462, which is a low count, so we need to be careful here. Means statistically there's always a bit of a risk with anything in this sort of range, but nevertheless we're looking at the Pillar Valley and surrounding areas on the north coast. More than half own outright, 24% are borrowing and 20% are renting. Mortgage stress is at 25%, rental stress is at 50%, some investor stress and some financial stress as well. Mostly houses, 89%, small number of other types of property there too. The people ratio is lower, 1.64, so including some individuals. Vacancy rate is extremely high. Again, this is a holiday area, so Airbnb and second homes and those sorts of things will be there, I think. Gross investment yield 3.2, net investment yield is minus 0.6. Looking at the ATO, they said 62,000, the census said 49,000. That gives a disposal monthly around 3,300, with 44% going on a typical mortgage and 43% going on typical rent. From a scenario perspective, for houses, a growth of 12% over 3 years, best case, slightly less for units, but the base and the worst case would be a fall. And the last one is Mermaid Waters, postcode 4218, with 15,000 households in the area, 32% owning outright, 30% are borrowing and 36% are renting. Around 16% have mortgage stress, but 73% have rental stress. There's some investor stress too. Overall financial stress around 42%. The mix is 41% houses, 40% units, and some other types of property there too. The people ratio is lower, so individuals are featuring here as well. Very high vacancy rates, 21.5%. Again, Airbnb and holiday accommodation almost certainly in vogue there. Gross investment yield is 4.6, net investment yield 0.8. The ATO said 87,000, the household census said 91,000, and that gives us a disposable monthly of around 5,500, with 44% going on the typical mortgage and 40% going on the typical rent. And looking at the scenarios, best case scenario about 13% for houses over 3 years and 12% for units, but the base and the worst case would be falls. Okay, the next one is postcode 4551 in the Sunshine Coast. And here we have 27,000 households, with 36% owning outright, 33% borrowing, 29% are renting. We have 31% in mortgage stress, 78% in rental stress, some stress investors, and overall financial stress at 40% of household, 11,000. 71% of houses, 13% of units and other types of property there. 2.14% is the people ratio, so that includes families as well as just individuals. Vacancy ratio, again, is high, so this is probably Airbnb in the equivalent. Gross investment yield 4.6, net investment yield 0.4. That gives a taxable around 73,000 and 77,000 from the census. Disposal monthly $4,827 on average a month, with 48% going on the typical mortgage and 46% going on the typical rent. And looking at the scenarios, well, the best case will be further rises for houses around 12% over 3 years and units slightly less, but the base in the worst case is a potential fall. Now, we've been asked by Beyond the Goats 6048 to look at 5353 Angaston and surrounds. So Angaston is in Adelaide, and we have there a low count again, so I must be a little cautious here, with just over 1,600, with 42% owning outright, 39% borrowing, and 18.6% renting. Not getting any record of stress, but as I say, it's a low count, so be careful with that. Mostly houses, 88%, small number of units and other types there. People ratio is 1.84, so some individuals, some small families. The vacancy rates are very high, 21.9%. So again, it could well be Airbnb, holiday accommodation, second homes as part of this as well. And the gross investment yield is 3.8, net investment yield minus 1.9. And the average taxable around 70,000, which is pretty close to the census, giving a disposal monthly of around $4,100, with 37% going on the typical mortgage, 29% going on the typical rent. Scenarios are very positive, actually, maybe 30% over 3 years in the best case, and a fall in the worst case scenario. Now we're looking at postcode 2195, Wiley Park. Wiley Park is in the area of Lakemba, of course, in the Canterbury area. 8,400 households with 20% owning outright, 21% borrowing, but 58% renting, so a lot of rental properties here. Mortgage stress at 47% is high, but rental stress is even higher. And we've also got stressed investors, so we have a very high financial stress measure of 75%. Mostly units, 68%, some houses, 26%, and overall the people ratio is at 2.8. Vacancy rate's 9.5%. Could well be that was student accommodation that was at the time not occupied. Gross investment yield's 3.1, but net investment yield is minus 0.6. And that gives an average taxable of around $57,000 or $64,000 for the census. Disposal monthly of around $4,400, with 45% going on the typical mortgage and 39% going on the typical rent. Scenario, best case, maybe a small rise over 3 years for units and for houses, but the base case and the worst case is a fall. Now, Roger K01 asked for postcode 3111. Thanks for your wonderful shows, Martin. You're very welcome. So postcode 3111 is Donvale in Melbourne. That's in the outer east. 4,500 households, 44% owning outright, 39% are borrowing, 15% are renting. Mortgage stress is 37%, rental stress is 100%, and we have also some financial stress overall. We have 86% of houses there, some units and other types. People ratio is 2.56, so it's going to be families. We have a vacancy rate of 6.6%, and the gross investment yield is 3.6. Net investment yield again is minus 0.7%. The average taxable was 97. The household census was 109, giving a disposal monthly around $6,400, with 46% going on the typical mortgage, around $3,000, and 34.4%, $2,243 going on the typical rent. Looking at the scenarios, even in the best case scenario, we're seeing falls ahead and significant falls in the base and worst case scenarios. Next one says, thanks for the great videos, Martin. Postcode 2060, please. I recognise that postcode. I used to work there in North Sydney. So postcode 2060 has 7,600 households with 5.4% owning outright, 12.8% borrowing, but 81.7% are renting. We've got a small amount of mortgage stress, but a lot of rental stress at 82%. Therefore, stressed investors are showing up as well. And overall financial stress is very high at 95%. I think it's the highest we've seen so far today. Looking at the mix, it's 9.5% houses, but 73% units and other types of property. And the vacancy rate's high at 15.7%. It could be that some of that was for students that weren't in situ then. Gross investment yield is 3.6, but the net investment yield is minus 0.1. The average taxable is 136,000. The household census at 128,000. That gives a disposal monthly of more than $8,800, with 40.9% going on the typical mortgage at $3,600 and 32.8% at $2,890 going on the typical rent. From a scenario perspective, the best case is a small rise, around 2% for houses, slightly less for units, but falls in the other scenarios. Scargo Man asks for postcode 3875, the oldest Victorian postcode, and 3880 Painesville. 3880 should be on the very edge of the statistical bell curve. Not that most inhabitants can hear a bell these days. Oh dear. Thank you for that. Okay, so let's look at 3875 first. So this is in the Wellington area, Latrobe, of course, Gippsland area. We have 8,300 households with 43% owning outright, 32% borrowing, and 23% are renting. We have mortgage stress of 74% and rental stress of 65%. Some stressed investors as well. Overall financial stress, 42%. Mostly houses, 89%. Small number of other types of property there. People ratios, 2.1. The vacancy rate, 7.9%. Gross investment yield is positive 3.1. Net investment yield is minus 0.8%. Average taxable around 65,000, pretty much correlated with the census. That gives us a disposable monthly around $4,200, with 36% going on the typical mortgage, 1,560, and 32.8% going on the typical rent. And looking at the scenarios, well, even in the best case, we see a fall in the next few months and slightly smaller falls for units, and of course, for the base and worst case, deeper falls. Here's the other one. Small count, of course, just over 2,000, 60% outright, 20% of borrowing, 90% of renting. Rental stress is significant, but no mortgage stress. We see 89% for houses, small number of other types of property, 27% are vacant at the moment. And that, of course, is at the time of the census just after COVID in 2021. Gross investment yield is 3.3, net investment yield is minus 0.1. Average taxable, 72,000 versus 50,000 for the census. That would suggest some interesting demographics going on there, including perhaps quite a few older. Disposable monthly income around 3,258, with 44% going on the typical mortgage and 47% going on the typical rent. From a scenario perspective, not much growth over the next 3 years in the best case and falls in the other two. Bacon Sandwich 72, what a lovely name, says, thanks for your work, Martin. Interested in New South Wales 2261 Glenning Valley. So this is in the Batu Bay area and includes quite a few small suburbs there and around Wyong on the Central Coast. 22,000 households, 34% earn outright, 36% are borrowing, 29% are renting, 39% are in mortgage stress, 90% are in rental stress, some stressed investors, 53% financial stress households. 73% are houses, some units, 10% and other types of property there. People ratios 2.12. Vacancy rates on the high side, that could well be second homes, Airbnb and holiday homes, of course. 3.3% gross investment yield, minus 0.7% for net investment yield. We see quite a lot of the Central Coast properties underwater from a cash flow perspective in an investment context. The taxable income is around 71 to 75,000, giving a disposable monthly around 4,700 or 51% going on the mortgage, 2,400, 40.8% at 1,918 going on the typical rent. From a scenario perspective, in the best case, there is a rise, about 3 to 4% over 3 years for houses and units, but falls for base and worst case scenarios. Keith W. Allen said, hi Martin, 4304. 4304 is Silkstone in the Brisbane and Moreton area around Ipswich. 7,300 houses there, 24% owning outright, 33% are borrowing and 42% are renting. 69% are in mortgage stress, 94% are in rental stress. There is some stressed investor stuff going on too, giving overall financial stress of 67%. 83% of houses, some units and other types there as well. The 2.23 says not just individuals but families, and 7.5% vacant. 4.3% gross investment yield, 0.1% positive. In fact, most Queensland investment property makes small returns at best. The typical taxable income is around 65,000, giving disposable monthly around 4,635, with 33% going on the typical mortgage and 32% going on the typical rent. From a scenario perspective, best case is a rise of 6% over the next 3 years for houses, slightly less for units, but the base and worst case scenario would be a fall. Scribble Zone 192 says 3337, please, Martin. 3337 is in the Melton, Bacchus Marsh area and includes Melton, Tulan Valley. 14,300 households, 24% owning outright, 48% are borrowing, and 27% are renting. The rental stress is 40%, 72% for rental stress, and some stressed investors. Overall financial stress around 40%. 91% of houses, small number of units, other types of property. The people ratio is 2.65, so again, families. Vacancy rates low at 5.6%. Gross investment yield is 3.2. Net investment yield is minus 0.9%. Average taxable somewhere between 67 and 76,000, giving a disposal monthly around 4,700, with 39% going on the typical mortgage, 1,846, and 33% going on the typical rent, 1,600. And looking at the scenarios, not much to see here. I'm afraid that most of the Melbourne and surrounding postcodes are looking pretty sick. So small falls over the best case scenario for units and houses. Worst case scenario is more significant fall. Now, Mitch9880 says, thanks for the video. Out of curiosity, in your opinion, do you think that the tides are turning in WA, or will the rent mortgage stress carry on for way longer? Well, I think the mortgage stress is there, but there's such strong demand in Western Australia at the moment. And so I think it's going to play out very slowly. I don't see a dramatic change. I don't think we're going to see rate cuts very soon. And I don't think we're going to see lack of demand. So I think the scenario will play out somewhat as it has been, but it is worth remembering that a lot of the stress relates to decisions that were taken between 5 and 8 years ago. So it has a slow burning fuse, in my view. Now, Adrian CS4TL said, can we please get a review of postcode 6164? That'll be very interesting reading. That postcode is booming and set to be a big investment suburb with the upcoming shopping makeover and the new beach park. People have got into the suburb at 2020 on low rates, but now rates have increased substantially. Interesting reading, as the area wasn't exactly cheap nor expensive to begin with. Thank you. 6164, which is in the area of Success in the district of Brand. And it's one of the ones that I've been watching quite closely. 24,000 households there, with 56% borrowing, 24% renting, and just 18% earning outright. 37% in mortgage stress, more than 5,000. 78% of rental stress, more than 4,700. Stressed investors, 21%. And households in financial stress at 46.6%. It's mostly houses, 86%, but there are some units, other types of property. The people ratio is high, 2.58, so that's going to be some families. We see 5.89% vacant at the time, with a gross investment yield of 4.1, net investment yield positive 0.3. This is a very telling statistic here. The average taxable is 81,000 for the individual, 114 on the household. So we are seeing multiple incomes going into supporting mortgage purchases here. Disposable monthly income therefore is around 6,500, with 35.8%, or $2,340 a month, and the typical rent $1,969 at 30%. Scenarios are still rises. In the best case scenario, it could be up to 17% over the next 3 years for houses, slightly less for units, but the base and worst case scenario would be a bit of a fall. Okay, so now we're moving on to Dale Mitchner, who asked for postcode 3756. Thank you, Martin. Thoughtful and insightful analysis, as always. Glad to help. So this postcode 3756 is in the Wallan area on the Macedon Ranges. And here we've got about 5,400 households, with 19.1% owning outright, but 60.2% borrowing and 20.7% renting. Mortgage stress is very high, 75% for the mortgage stress and very close to 100% for the rental stress. And that gives a total financial footprint of stress of 67%, which is very high. We see 93% houses, small number of units and other types of property. We see a people ratio that's very high at 2.7%, so that's going to be in families. Low vacancy rates at 5.4%, and the gross investment yield is 2.6%. The net investment yield is minus 1.8%. That's quite deeply negative. Looking at the taxable income, 71,000 versus the census at 99. So again, multiple incomes going from the family to pay the mortgage. Disposable monthly around $5,900 per month, with 34.7% or just over $2,000 going on a typical mortgage, and 29.9%, $1,794 going on the typical rent, with 75% in mortgage stress and rentals stress very high. You can see these numbers are quite worrying. As a result of that, and because of the very high stress levels here, we're going to see price falls likely over the next 3 years. So even in the best case scenario, down 9% or 8% for units. The base in the worst case, significantly worse. Now, next one, could you please review postcode 2122? It's bonkers over here. Thank you. Yeah, it's bonkers in lots of places. So this is in Marsfield, in places like Eastwood. That's in the Ryde Hunters Hill area. And we got 30% owning outright, 29% borrowing, and 39% renting. A lot of renters, of course, in the area here. And 36% in mortgage stress, but unfortunately 80% in rental stress. That's flowing over to the investor stress area, and 53% of households are in financial stress. It's 43% houses, lots of units, of course, units going up all over the place there as well. Other types of property too. People ratios 2.46, and the vacancy rate 7.4%, with the gross investment at 3.5 and the net investment return minus 0.8%. Looking at the average taxable, 87,000 versus 101,000, giving a disposable monthly around 6,300, with 47%, $3,000 going on the typical mortgage, and 36%, $2,292 a month going on the typical rent. Looking at the scenarios, there is a scenario of small rises over 3 years, 5.8% for houses and 5.2% for units, but the base and the worst case would be significant falls. Next one, can you please review postcode 3030 Victoria? Thanks in advance. Sure can. So 3030 is Derrimont, Point Cook, Werribee, which of course is one of the ones I keep coming back to. More than 41,000 households there and rising, I would add. 19.5% down outright, 47% are borrowing, 33% are renting. We have 35% in mortgage stress, 69% in rental stress. We have 12.2% in stressed investor land and 43.9% of households in financial stress overall. A lot of houses, 86%, small number of units, other types of property. The 2.71 is the people ratio, so a lot of families here, not just individuals. Vacancy rate was 7.4%. Time of the census. Gross investment yield is 3.1, but the net investment yield is minus 0.6%. And looking at the average taxable, 77,000 versus 106,900 from the household. Again, multiple incomes from a household going to service the mortgage. Disposable monthly on average around $6,700 a month, with 35.8% or $2,400 going on the typical mortgage, and 27.6% or $1,849 a month going on the typical rent. Scenario speaking, not much good news, I'm afraid. Falls, even in the best case scenario, both for houses and units, and more significant falls for base and worst case. Stuart Charles, 5030, says, outstanding work, Martin. Thank you very much for that. Postcode 3195, Aspendale Gardens, and postcode 4035, Albany Creek in Queensland. Let's have a look at those then. 3195 is the first one. And there we have 14,500 with 34% owning outright, 43% borrowing, 21% are renting. We've got no mortgage stress, but 95% of rental stress, small amount of stressed investors as well, 29% of financial stressed households overall, 6% of houses, 12.9% of units, 27% of other types of property. People ratios 2.46, so that's families, not just individuals. We've got the vacancy rate at 5.9%. We've got the gross investment yield at 3.3%, 3.4%, net investment yield at minus 0.7%. We've got the average taxable at 90,000. The household census set 114,000. So again, multiple incomes going to service the mortgage, giving a disposable monthly of around $6,600 with 39.8% for the typical mortgage and 31.6%, just over $2,000 for typical rent. And looking at the scenarios, I'm afraid there's no good news here. Over the next 3 years or 36 months, small falls for units and houses. Under the best case scenario, the base and worst, more significant falls. And then looking at Albany Creek, 9,900 there with 35% earning outright, 48% borrowing, 16% renting. Half are mortgage stressed. Pretty much everybody with a rental has got rental stress, and overall financial stress is at 44%. 86% are houses, small number of units and the types of property. 2.73 is the people ratio, so again, families. Low vacancy rate, just 3.9%. Gross investment yield, 4.9%, pretty high. Net investment yield, positive, 0.7%. And looking at the average taxable, 92,000 relative to 127,000. So again, multiple incomes going to service that mortgage. Disposable monthly around 7,300 with 35.6% or 2,600 going on the typical mortgage, and 32.1%, $2,343 a month go on the typical rent. Scenarios would say best case scenario, still a rise possible, 9% over 3 years, best case, slightly less for units, but the base and the worst case would be a more significant fall. Xbrain86 said, postcode 4879, please. Thanks, Martin. Love your work. Thank you, and glad to help. So here we have Palm Cove in the far north, Trinity Beach and places like that. Been there a few times, lovely part of the world. We have 8,800 households with 29% earning outright, 39% borrowing, 30% renting. Mortgage stress at 35%, 45.1% in rental stress. Some investor stress and overall financial stress for households at 32%. 78% of houses, some units and other types of property. The people ratios are just over 2. High vacancy rate, of course, this is holiday area, so you'll have Airbnb and second homes and holiday accommodation of various sorts there, especially just post-COVID, it was probably quite vacant. Gross investment yield is 4.4. Net investment yield is positive 0.5%, and we see average taxable around 76 or 88,000 for the census, giving monthly disposable of around $5,500 a month, with 37% or just over $2,000 going on the mortgage and 36.2% or $1,993 going on the typical rent. And looking at the scenarios, best case scenario, significant rise is over 3 years, 17% for houses and 15% for units. The base case, not much happening. Worst case scenario would be a fall. So there you have it. Well, I want to say thank you to all of those who put requests in. If I missed any, and it's possible I did because I had to pull it from various sources, just leave a comment and I'll make a subsidiary show. But I think I got most of them, and I want to say thank you very much for putting those postcodes in. Very interesting to see the significant variations across different postcodes, different types of property, and particularly things like the different investment returns, the different scenarios in terms of future growth, and also the fact that in some cases we've seen households with more than half of their incomes going to service their mortgage or their rent. That's putting huge pressure on many households. And, I don't subscribe to the view of 30% of income and above is stressed. But when you think about that 30% was floated some time ago, and here we are at 50% plus, then it shows you just how far things have deteriorated. And unfortunately, as I said to my earlier shows, it will continue. Now, just before I close, I just want to tell you that if you would like to get hold of the complete series of the information that I've shared with you for more than 2,000 postcodes, it is available. It's available by my Patreon subscription service, and it's $50 US a month. You can join up by going across to the Patreon. The link is there. And you can sign up for just a month and grab the latest, or if you want to get it each month that you're subscribed, that is the way that you can do it. And for those who've already subscribed, thank you for those subscriptions. Really appreciate all the support we get via Patreon, as well as the other support mechanisms. I'll be sending out the complete set of data in the next day or two, so that you'll be able to enjoy it yourself. Well, that brings this show to a close, and this series into a close as well. I want to say thank you very much for watching those shows. Do let me know what you think about this sequential release of information over a series of days. I was able to go into a lot more detail and also have a significant amount of interaction with the viewers as well. So tell me if you like it. I'll do the same perhaps next month, or we might try something different again. That's the beauty of YouTube. We can see what works the best. So thank you very much for watching. Look out for our next show. A reminder that next Tuesday, Steve Keen will be on for my live show. Steve Keen, of course, is the economic professor who's got a very different view of the way economics works. And we'll talk some broader issues too, so that should be fun. Anyway, mark your eye for that. Thank you very much for watching the shows, and keep an eye for my next show, which will be out tomorrow. This is Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.